I would want to bring up that I think I could see this at roughly 18 and a half times. I think it's too cheap for all the drivers they have. But I agree with what you're saying, and there's certainly risk to the company. By the way, I love Ruth Porat. I think slowly but surely she's bringing more transparency. When she talks about some of the sloppiness of at least a quarter of the modeling out, she's someone that really you listen to, and she's someone that you don't take this as a smokescreen. I think she's bringing a lot of transparency, and as we get more into the capital market side of what they do with $120 billion in cash, I think you listen to that. But again, if you look at Google sites, XFX, FX neutral, around 20% is what I think you want to see. Remember, if we're looking at the bottom line on Google, this is not what we've tended to look at in the past. I think we still want to see the top line. The fact that this is an OPEX-heavy number doesn't really bother me at all. I think these are great numbers. 26% off the June lows into earnings. What do you want? I think this is just a breath of,
And your point on the operating expenses, right? Those are investments to get growth. So you kind of have to say, all right, this is one quarter where the company invested some money so that their business model can continue to grow. And if you look at it, the thesis isn't broken on this. You look at their ad search revenues. Those are still up. That thesis hasn't broken. Other properties doing well. That thesis hasn't broken. So if you can look past, and I think the market will look past this one quarter of investment, then I think you see the stock break to the rise again.
To Dan's point, it has already. It's only down 1%.
Yeah.
It's still above all its moving averages. You would think that the positioning going into this print was extremely negative. I think it's a buy coming off this print for everything that these guys had said. I'm unhappy that there was a miss, though, but that's the only concern.